there was a Wall Street Journal article that said that Netflix is looking to cut another $300 million in expenses due to the delayed launch of the password sharing crackdown. And one of the things we've been calling out consistently post earnings and going through the model is that it looks like revenue growth is pretty much non-existent despite them continue to add subs. There's very low incremental revenue to show for that. It supports a view that there's some cannibalization going on the ad tier side, but also just that monetization continues to be weak. So overall, more signs here that while management is proven very skilled at spinning the next narrative, as kind of the rubber meets the road here, they're just less skilled on the execution front. And we'll continue to see the timing of the password sharing crackdown. Again, we're in a seasonally weaker time of the year for sub trends. I think they set expectations inappropriately last quarter because they were trying to buy themselves a little bit more time. But ultimately, I think it's going to come back to bite them as soon as this next quarter. So continues to be a best idea short, and we'll just continue to track it as we go.
Yeah, a big part of that was that Reed was leaving, right? So they just took the bon voyage guidance as opposed to the realistic guidance.
Yeah. I mean, that was definitely the case for Q4 going to Q1, and then they said in the Q4 earnings that we're no longer going to report subscribers. We're no longer going to guide for subscribers, and then they also said that they're going to have the password sharing crackdown occur in Q1 in the US, and as a result, they would expect Q2 subscribers to be up, relative to Q1 in terms of net additions, which seasonally speaking never happens. Usually Q2 is below that of Q1. And so then that didn't happen. And so then they reported Q1, and then they kind of had to reset expectations again, which the sell side was very quick to defend them. And it was the miss was kind of well advertised in advance, which is why the stock reacted the way it did. But now, looking at estimates, now everything's even more back end loaded to the of 23, right? And so the bar is now higher for the back half of the year. And ultimately, there's going to have to be some type of reset in expectations if we're right on the fundamentals and the sub trajectory, especially if they don't crack down on password sharing, because that's a big source of the ARPU upside that they're expecting. But either way, even if they do that in the shorter term, it's going to be highly disruptive because there's always a churn event that happens when they do that. They're playing with fire in many ways. And as I say, you typically get burned. So if they can execute and pull this off, I'll be impressed, and I will probably sing a different tune, but I just don't think that's not my base case.
There's absolutely no fundamental reason to do that. I mean, they're canceling their upfront, presentation. They're cutting costs. The consumer confidence number for May was a terrible number. I mean, don't forget that today is quite literally for any company that's on a calendar quarter, you're at mid-quarter now. So you can handicap pretty well if you're going to have a bad quarter. And this has always been our catalyst. Q2 is the toughest comp from a top-down S&P earnings comparison perspective, because you go back to the peak of the economic cycle in Q2 of 2021 and you use a 2-year look back in your model, and voila. Whether the CFO saw that coming or not, I'm going with not, unless they pay for our research and understand it. Then not is not. So good update there. Real important one. Probably one of the more important ones that we had this morning. And I was not expecting that. I was expecting Netflix to slow. I just wasn't expecting you to say it that way.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.